Hi, I'm Mel Lopez, Chief Economist for ASEAN.
And I'm Peter Lundgren, founding CEO at Lundgren's Capital.
Welcome to Sound Economies with Mel and Peter, an East Meets West podcast by Lundgren's Investor Insights. Here we share what we're focusing at in economies and financial markets from the developed and the developing world. Hi, Peter. Another week, another podcast. How are you so far this week?
I'm El. I'm really good. Exciting times, honestly, and that is both on sort of as a macro economy, companies, segments, and also for political, of course. And then we're very busy in the company as well, and that's that's also important.
I bet.
So fine week so far. What about you, Mel?
Oh yeah, so it's been an exciting week here as well. We are currently working on a piece regarding Japan's green bonds market. So that's for our Lundin's Investor Insights Economic Spotlight. We're coming out with that real soon. So that's what's been keeping
Very
us here busy. Let's jump right into our topics for this week's episode. A lot on our plate. So first, we'll start with the results of Germany's snap elections and its implications on the economy. Next, we're seeing signs of consumption recovery in China. Then we'll cross over and discuss consumer sentiment in the United States. We'll also look at Trump's new policies on investments to and from China. And finally, as usual, we tackle our global outlook. So, Peter, let's first discuss the situation in Germany. We've been talking about it sporadically. Yeah, so it's been an exciting election season in Germany.
Yeah, sure. It actually was a very exciting Sunday evening when
Mm-hmm.
the results ticked in. First of all, of course, there will be a new political leadership in Germany that, as expected, a new chancellor,
Mm-hmm.
Friedrich Merz from the Conservative Party CDU, but they won. But not more than just they won. Actually, it was a bit disappointing, the result. So it is not a strong result that he's showing, but it is enough for Philip Mass to say, okay, he is a decision taker.
Mm-hmm.
Well, there was a hope that they could choose to team up maybe with either the Social Democrats, SPD, or the Green Party, Die Grünen. But the CDU result was too weak combined with also the Green Party going back.
Yes.
So there is actually in the political landscape that they have defined for themselves ahead of the election is there's only a coalition opportunity with the SPD, the Social Democrats. There is also a majority together with the right-wing AFD, but that is not an option.
Mm-hmm.
Um,
Right.
that's what they've said beforehand. Yeah, this is one of the outlook saying okay, it's like expected. Yes, the smallest window of all because there's only one coalition partner for CDU, the Social Democrats. They come from three governments now. They have participated in the past three governments as either junior or leading coalition partner.
Mm-hmm.
They are beaten up as a party. They have lost so much in this election. The political leadership will be changed. That is sort of the outlook. And a party they need to go into opposition. They cannot stay in the government anymore. They need to sort of recover, so to say. They have they've just have no structure anymore in the party. There are big disagreements about should they stay trying to focus on sort of the middle of the political spectrum, or should they go more left? But so they actually need time to reorganize and find themselves. But Germany needs a new government and then move on. So the new CDU leader is of course keen, or the new coming chancellor is keen to form a government very fast, and that is already now making frictions. Whatever happens is our forecast is as ahead of the election, it will be a weak government.
Uh-huh.
Philip Merz might, in the start of the government period, appear strong because that is sort of how he is as a person. But the political sort of foundation, it will be weak, and it won't take a long time before it sort of cracks a bit. So that is basically our outlook. Can he reform the German economy? Not a lot, because what he has proposed so far in the election is not interesting at all. And we should remember that this year the forecast is now that Germany will have a negative GDP growth of like 0.5%.
Mhm.
That might change a bit in the end of the year. It could be that people start to look a bit more positive on the sort of on trust, after all, on life in Germany. If you look into sort of polls and different indices, it
Mhm.
indicates that people are actually saying they're okay with the current situation, but they're afraid of the future. That is
Yes.
always the worst that can happen for in the economy. That is when consumers are sort of fearing the future, because then they hold back. Yeah. So some more confidence could actually free up some spending, and that could happen. We fully aware of that. Otherwise, there's another interesting issue that is worth to observe, and that is heavy founded law, part of the constitution, that hinders Germany to escalate on issuing debt. Yeah, and
Oh.
that is called sort of the debt ceiling. So they can only issue debt and increase the debt in within certain limits, and that is actually founded in, as they got it founded in the constitution. To loosen that one up, and that's been a big discussion, and that probably will be a solution for German economy to move a bit forward. Two-thirds of the parliament need to approve. Now, that is a challenge because the outer left and the outer right, the two parties, AfD and what is called the left party, Die Linke, they now have more than one-third of the votes. And,
Oh.
and, and it
That's
is
why
so
it's
it is much more tricky than so, because none of the other parties want to negotiate with the left-hand AfD. So
uh-huh.
now the new chancellor from the Conservative Party, he will, if he wants to loosen the break, he would, as if one should follow what they're saying, they would now need to negotiate with the most left-hand party at all in Germany, and give them some goodies for approving uh, the loosening up the debt ceiling. This is already a bit sort of indications of a, I wouldn't say a chaotic situation in German politics, but it is surely not a straightforward situation. So this is what we have to look into. How much would it mean for investors? What would it mean for stock markets? Yeah, as a honestly, we continue to say it's not really impressive, and
Mhm.
there are no suggestions on the table that could encourage investors to increase their allocation to German stock market, and we simply stay underweighted on European stocks. It is a conclusion, a bit sorry to say, but we can't change it. So that was sort of the long-awaited German election, and a bit of talk on that one. But it is, of course, important. It's the largest economy in Europe. It's actually a catastrophe, and it's one of the leading economies in the world, or the largest at least in the world. Yeah. So that was all from Germany, and on that one.
Yeah, that situation's pretty grim, if I may say. But I'll jump into a more upbeat scenario we're seeing here
Yes.
in this part of the world. So China, after a few quarters of really weakening private consumption, there are bits and pieces of news that we've seen the past few days that kind of show encouraging signs that household consumption is on its way up. Three small, seemingly small occurrences, but taken together, it's more encouraging than you would initially view it. So first is a public listing of a Chinese bubble tea maker. So it's pretty nice, right? So it's called Mishue. and they're going for a $444 million IPO in Hong Kong. So that also aligns with our expectations that it's going to be IPO season mainly in the Hong Kong market, Peter. And yeah, it's happening. So they're going to start trading on March 3. And this bubble tea maker, they really profit from selling cheap and affordable drinks. They actually have more stores globally than what Starbucks has. So that's kind of the
Wow.
scale we're looking at. And arrangers of the IPO are the Bank of America and Goldman Sachs. So that's how big it is for the market. And yeah, so they mostly anticipate consumption of bubble tea and therefore food and beverage consumption in China to keep growing this year. That's why they think it's a good time to list.
Yeah.
Second, and it's another cute bit, if I may say so. So there's a Chinese animation film that's called Neza 2, and it actually garnered $1.7 billion in box office sales. So it's now the highest grossing animated film of all time globally. It beat
Wow.
a Disney film from the position. And that's showing that there's more disposable income, or people are more willing to spend and go out to the movies after a long lull regarding consumption spending, particularly on what they consider to be luxuries or
Right.
um, optional spending. There was also a big surge in domestic trips taken by Chinese nationals over the Spring Festival break. So that was a week-long holiday spanning the last week of January to early February. And from that number, that's about 9 billion trips. So back and forth of multiple locations. And the trend is the elderly are also traveling more. So their willingness to spend is rising. So it's put it together. These are encouraging, albeit small signs that domestic activity is really picking up in China early into 2025 after a sharp slowdown we saw in 2022. And yeah, that's something that keeps us encouraged towards the Chinese market despite, some turbulence, especially with the tariff situation with the US.
Yeah, this is highly interesting. It is actually really something that is worth to focus on, and we recommend investors to keep an eye on this.
Yeah.
It might be what we've been waiting for 3 years now.
Yes,
We
yes,
know,
exactly.
of course, but right now it looks good. Yeah. So this is very important. Yeah, we can't say anything else. Keep an eye on it.
Yeah, and then let's compare the consumer's mood in the US, Peter. So, is it an exact opposite of what China's experiencing right now?
Yeah, I think the market got surprised last Friday, yeah, when we had the consumer sentiment out at just 64.7.
Yeah.
Um, the month before it was 71.1. The drop was expected down to 67.8 actually. But this is a huge drop. It's much bigger than that we often see. Maybe we see this once per year. Yeah.
Mm-hmm.
So should we be very nervous? This is enough for us to say, okay, we certainly observe. And some of the components they have big swings, and it's sort of as a durable goods, how much people have been spending on durable goods it's pretty volatile. But it was actually down 19%. What's maybe more worrying is that when people are getting asked about expectations for the personal finances, sort of in the short run, the outlook dropped 10% on that 10% on that sole component. That is a bit honestly a bit bitter. It can be we don't know if Trump is making people nervous or it's the egg price story, we wouldn't say, but it is this is significant, and it actually correlates with the approval rating for Trump is dropping, or it's more the people who are disapproving Trump, so they are on the rise. The people who are approving Trump is basically pretty stable, but for sure there is a movement. It could be a single drop. We will see. U.S. consumers are normally hard to beat. Yeah, they stay very strong, and that's why this is so important to see sort of see other indicators from the U.S. that is pointing in the same direction or sort of in the opposite direction. If more indicators of the same comes out, we actually start to be slightly more nervous than we are. That is for sure the our partial conclusion. Yeah. So
Right.
yeah, it's somewhat more brighter in your end. Well, that's good. That's good to know. Yeah.
I think people are starting to recognize that tariffs mean trouble for them. Um,
Mm,
not necessarily, this is not necessarily an economic indicator, but there is a CNN poll recently that said 62% of Americans feel that Trump is not doing enough to tame inflation. So maybe that's where the really
uh,
huge drop in consumer optimism is coming from. And yeah, that's what we're seeing right now.
there could be some reality. Yeah, as a reality facing the consumers, as
Mhm.
we have talked about several times.
Yeah.
The middle class in US, they voted Trump into the Oval Office to fix the economic problems and the shortage in the wallet. Yeah, this is not what he's doing. This is sort of the opposite thing that might be surfacing now. Who knows?
Yeah.
But very important to keep an eye on.
Mhm.
Good. Well,
Actually, speaking about the US, Trump is actually pursuing non-tariff barriers against China this time. So on February 21, so
mm,
he released this memorandum citing national security where he is building on the Biden era restrictions on investment into Chinese companies and Chinese businesses.
mm,
So he is actually tasking a committee in the government to restrict Chinese investments into certain sectors in the US, like technology, infrastructure, healthcare, even agriculture and energy, because he sees this as a way to prevent knowledge diffusion or of
mm,
stealing trade secrets from American companies. And in turn, US investors also cannot invest in Chinese technology, semiconductor research, AI research, likely as a response to the DeepSeek newsmaker incident. And I think another important facet of that memorandum was that he ordered the committee to audit foreign firms listed on US exchanges. So that's adding to market jitters towards
mm,
investing in the US because you have a new president going ham on tariffs. Basically, you cannot really predict his next move as far as who or what industries he will tarify because it looks like
mm,
he is just targeting an industry after another and then a country after another, regardless if it's a major trading partner. So this might the response of the market might be to push investors away, not just from China, but even in the US, because you have this, for example, this audit that could occur. So that's another source of uncertainty that you might not want to face if you're considering a location. And we're seeing some signs that this could lead to a decoupling or away from of manufacturing in China. We already saw Apple start producing their iPhone 16 line in India. So they're starting with a cheaper version, a budget version of the iPhone 16. It's already being manufactured in India. And apparently the rest of the iPhone 16 line is being built there. They want to transfer the production of AirPods there as well. So that's
mm,
kind of the path that American businesses could take, or even foreign businesses could take,
mm.
in response to this U.S. China tug of war, basically.
Yeah. So he is tightening
Mm-hmm.
towards China. Yeah, as you say, again using basically the capital market a bit, as as you refer to in the memorandum. So it's not a tariff, it's just all other areas where they can introduce different ways of as a hindrances between the two economies, so to say. Yeah. Will this hurt the Chinese stock market, sort of?
Well, it will hurt maybe some of the retail or the consumer segments in the stock markets, but the lift that we've been seeing regarding tech stocks could offset this impact. And now that we are anticipating further tariffs that would take effect in March, for example, the steel and aluminum and the other tariffs targeting Canada and Mexico. So that could also hurt not just Chinese stocks, but also US stocks in the coming days.
Yeah. Maybe the sentiment is slightly negative these days, yeah. So yeah, it could sort of add on the downwards momentum, but are we looking into sort of a steep sell-off, or is it just more sort of a very small downwards correction? What are your thoughts there, Mel?
There could be an initial, of course, a knee-jerk reaction will occur, but once initial market reaction settles down and we go back to looking at company fundamentals, industry trajectory, there would be some correction that will occur maybe a few days after another major tariff or regulation coming out of Trump is announced. So it is very or more volatile right now, Peter.
But is it so volatile that we should be nervous, or should we say, okay, this is what happens, and we stay on board because the underlying trend is upwards. Where are we?
We are cautious. It is something worth really monitoring closely as we do as usual, but yeah, it's not something that should change our long view at the moment.
Okay, so we remain positive.
Yes. Yes, as we always do. Yeah, and then let's go to our global outlook. Towards Asia, we remain optimistic about our positions here. While there is greater uncertainty, particularly towards the Chinese market, um, there are more reasons to stay positive and to take positions here, especially in emerging markets where growth remains faster than the developed world, Peter.
Yeah, that's good to hear. It's we have the strong happiness in Asia. That's so good. Yes, today we came across a few more clouds. Yeah, sort of things to consider, things to be concerned about. Sure. Are we that worried that we change our in general positive outlook on the financial markets global world? No, we still see majority of sunshine. We stay overweight in risk, so to say, yeah.
Yes.
Meaning more equities than neutral position would include. Duration, we've moved to sort of the mid-range for a long time ago.
Yes.
And but otherwise, we still like credit risk, we like the emerging market bond risk. So we are, so to say, all maybe not all in on risk, but we are very much in on having risk in the position in the portfolio and how we allocate. So this is not changed. Again, the number of clouds on the horizon might have gone up with another one this week, yeah. But it's not sort of it's overclouded by far. We are remaining faithful to to all the long-term positions and views. And yeah, this is how we enter the coming week actually.
Yes. We remain watchful and optimistic. Thanks, Peter, for another very insightful episode for our podcast today. And thank you to our listeners. We'll be monitoring global developments and we'll share what's interesting in the next episode of Sound Economies, Mel and Peter on the Global Financial Markets, a podcast by Longines Investor Insights. Thanks for tuning in. For expert insights on the go, download the Longines Investor Insights app for free. For investors, we offer very exciting and high-quality alternative investment funds, including our top-rated Mutual China Fund. To know more, visit longinescapital.com.